Hello, and this is going to be fun as I'm going to be going back in time over 100 years. And I will use the 3 day time frame to do such, going back to probably around 1915 and seeing if I can gain around 240 times what I choose a starting bankroll to come in at. The reason for such is for showing the numbers game for markets that just continuously go straight up. This is relevant for cryptocurrencies when you see major 50, 100, 200, 500x and any large insane style gains. For what I want to do is I want to sell the most amount of coins that I can without ever selling out the coins, so that if it goes to a certain point, I don't want to sell too many that if it goes high, I'm pretty much running out of them. And I don't want to sell too few as well, because of the fact that I want to be able to profit on the corrections that come back lower. On the entirety of this chart, that's 3 minutes. I'm looking for 3 months, so let's put that in. This is going to be the entirety of it. So I'll even start at about 60. But now when I take 24,000, 456 or 24,500 in a rounding point of view, I'm going to say 60, I said, yeah. I'm going to need to overperform the market by 400 times, because that's how much the gain will come from this point. So then, what's going to happen is there's going to be one magnificent series of buybacks, and this will be the only one. How well it corrects on these small dips and throughout the silent crash of the 1970s will be interesting. And then, of course, the 2008 will give a few buybacks, but most likely the amount that will be gained compared to just hodling will be significantly lower. And I'll state why that is okay for 3 different reasons at the end of the video. It's probably going to be a long video, but you already know that. So we'll start here at 58.10, and I have created a spreadsheet to use this exercise. And in such is where you put in whether you're buying, selling, the amount, and the price, and it will calculate everything thereafter, telling you how many Dow Jones you hold and what the value is. $1,000 was a lot back then. So that's the number that I would like to choose, and let's invest 60%, around $600 worth to start. The original number again, 58.10. These numbers were in just for testing the formulas. Alright then, so how this is tested is it takes the, well, I'm using a 0.15% rate, but it calculates how much US dollars you have from any purchases. You can see here that a purchase of 10 took $581 out, but it added in 10 Dow units, giving you 10. So therefore, let's put buy orders and sell orders in along the way. So to do this, we'll start off with the buy orders. If we buy at 50 or 49.33. That's a little more than 10%. And considering I know that 41 will never go below, let's just, knowing we have a prediction, I think it's never going to go below 41. That will be the lowest buy order. Of course, you might put another one in that never hits. So now we need sell orders in. If we sell for 10%, that would be 63. Let's try to aim for better than 10% each time. And then just keep putting lines in. And then I'll just keep moving them, putting in the spreadsheet, the data, and then just keep moving them higher and higher as market prices dictate. Because there's going to be a lot of sells. This thing goes, of course, well up to 100 and or 24,000, 27,000 even when we include the highs that it actually has. But when you're playing the real game, you can literally keep on doing this strategy infinitely, which is the whole point of what I'm trying to do here, to see if in fact what type of level you would be at when you get to that next stage. I want to put a lot in because I do think I'm going to have to be removing a lot of these higher as we go forward. For now, that'll be fine. Let's reset the scale. Okay, well, I guess I would have got a sell order hit. So now we'd have to figure out how much that would be sold for at 67.42. We'd be selling a gain of 9. So that would be about 15%. So then, if we look at having 1 unit turn into 11.5, that would be 1.15, or 10 going to 11.5, so 1.15 into 11.5. That's about 10%. So if you sell 10% and sell 1, that would be the equivalency of what you would need. However, I want to do a hair lower almost all of the time that I can. So this is a spot now where we'd have 9.1. Move this forward, go for a buy down below. Maybe down towards here, lower this a little. Actually, I have 2 down here. We'll just do it like this. And we're going to have to count this as a miss, as unfortunate as this would be, but we have to be real here. 78.49. And at this stage, I'm going to sell 1 full one because the gain differential here was 12 basis points. That was almost 20%. So to sell 10% on a 20% gain, to me, is a good ideal number, and I'm down to 8.1. Net value of the portfolio is 1192. Now, the reason why this is lower here is because it takes the last price, multiply how many of the Dows you own, plus how many US dollars you have. So let's slide this down back to some key areas in here and sell at the 94.11 handle. And a differential of about 15 points and change. So again, about 20%. 0.81 is 10%. So going 0.9 is a little over 10%. But again, I want to sell as many as I can, but ensure that it works out so that I always have a good value of my alternate coins, which in this case is the Dow Jones. But of course, using it for the example of comparing cryptocurrency trades. So let's move this down again. Even a little lower. And then go through a significant period of time without making a trade, but it's breaking resistance. I could be playing away at small gains, but just be patient and let the market do its thing. After all, you can do this with most jobs, and just check your computer on a daily basis. And when a buy order like this hits, how long is it going to take to put new orders in? Question mark. And the answer is not long. So now we have a buy at 75.89. That's a pretty good differential in price. The last time we had $84.57 come into the bankroll. One would cost us 76. 1.1 would cost a little lower than what we bought before. So now I got 8.3 Dow. And let's lift up a sell order here. Let's go below this high. Roughly around here. That looks like a hit because we can see this line barely goes below. 68.77 is the low. I got 68.58 written down. So that's a buy hit. That's 6877. And we're technically buying this one back, which brought in $78 at 1. 1.1 would cost 75. Let's continue on further. Maybe place this seller just a little higher and then move this one up to about here. Missed that one by a bit, but hit it there on the gap open, 83.28. The gain differential, 14.5, and I just thought of an idea. So I'm going to put percentage gain on here, but 14.5 is about 20% again. So therefore, 0.94 would be 10%. I could probably get away with selling an even one. And one of my likely things I like to do, especially if you're playing for something long term, is sell less than what you bought back before, even if it's just this 0.1 or 10% of it. And what I want to do here was insert a column and have price change, which is this. Push the right button would work or help. Subtract previous price. And then divide the previous price. And put this into percentage gain. And for formatting this, I put percentage. You go percentage, usually 2 decimals. Font, I don't care about the font. Font color, I want this to be green because that's what positive numbers are. Just coming, yeah, it comes in green. And then I want negative numbers red so that I can see what the gain happens to be. And we'll just copy and paste this a few rows down. Don't know how many of these we're going to fill. But there we go. Let's move on. Place this at previous low. And even look at a few more periods just because it'll be easier to place orders. 99.25 gets a sale. So a 20% move. So I'll again do one and continue on. Let's move that down to this key little area here. And we got 116.81 hit. This might not be a great percentage gain, so if you sell small or large, you can adjust accordingly. 17.69%. So in this case, if you do say, even go 0.8 for one, and at the point now you got 757 US tether and your total portfolio worth 1528. And this is with the market doubling in price. Of course, you've only ever really invested at this stage 500 and change into this market because you bought back in case it went lower and it never did. So then we'll just definitely move this lower given the volatility nature and move this down to roughly here, then again down a bit more lower. And there's the 91.78 hit. So that was a 21% decline. We managed to receive that of $93 before, and that was from a sale of 0.8. So if we tried 0.9, it would be better. 1. It's a gain of 0.2 because we gained 93.31 when our 0.8 sold was at 116, and then using the majority of this, but keeping about $1.40 or so back, gave you a 0.2 gain. So let's continue on. And if I'm looking at the crypto game, I would just go previous top again. But did both orders hit? No. So I'm just going to manage the 76.98. This represents a 16% decline. $99 I received last time getting this buyback from that sale. So I want to spend close to 99. Okay, let's move into the second decimal here. So 1.25 bought amongst this area. So that brings it up to 8.85, a portfolio worth 1,250. Move the sell order higher, say somewhere up around here. Again, that buy order barely missed, but it didn't there at 66.45. This is only a 13% move. It's this buyback here that got $83.16. So 1.2 costs $79.86, and 125 is almost the exact number, but definitely enough where we can add this into play. Own 0.1 more than the start. But what I want to talk about is if you're in a situation like this, sometimes you can take one of these orders like this and try to sell it for a much larger gain, which is a good time to do so. After all, we can wait for the 92 level or even just barely reduce it, which is what I'll do, is just barely reduce it to, say, 88. Even go like down to like 85. But then what I can do is take this buy order and keep on moving it to a much higher spot. Because I know in time I'm going to be needing it. And if you're playing a coin bullishly for the super long term, you're going to want to pick away as many of these buys here and there that you can get, that you can sell for much larger prices to really help you get the most of these gains when they really do go. So here we have a situation. We get the sale at 85.96. And this is for a move of like 30%. But I still only want to sell maybe one at this point. We got it down to 9.1 as far as the ownership is concerned. And place this new buy order right near this previous support level. And then just wait for time to say it's the market. But look at this situation here. 1922 November, no trade. 1924 September note trade. Imagine logging on every single day. Internet speed was no such thing back then, but you get what I'm saying. That you're going through like over 2 years without making a trade. Finally, you sell some at 118.61. And this was sold for a pretty significant gain from the last move of 86, 38%. So therefore, in a spot like this, you could get away with trying to go for maybe a little bit of a larger sale. Maybe you want to do something about 1.5. And then move this down, place a buy order here. And you're raring to go. 152.89 is next. And we have 28.9%. 7.76 is 10%. So if we do just one, and that get us to 6.6. We've seen the market have a tremendous uprise move. Of course, the big crash is going to give us a very good buyback opportunity. Of course, you only know the big moves lower in real life on cryptos is only a matter of time before they happen. And that'll be one of the 3 things I'll talk about at the end of this. But for now, it's time to place a new buy order. And we'll do so maybe somewhere down here. And then go through into late 20s. We're getting close to the top, 195.92. Got a 28% gain on this one. So 6.6 is the ownership. 10% would be 0.6. Let's do about 0.8. Of course, if you're a know-it-all, then you'll be really soon considering that of... let me just fix this here. This has got to be fixed to here. This should be fixed, say, down to here. I went from playing smallish moves like 10, 12, but it's probably better doing it this way as it is anyway. Okay, so now we're going to play it back down to the 154 number for the buy. But if you were smart aleck, you know, okay, it's going to have to tops pretty soon. You would just be considering here to sell it all pretty much now or in the very near future. There's a 245 sale right now with 87 cents. I'm going to kill or 67 cents. Probably as it gets to the high close to 1,000, I'll kill the pennies and just round the numbers. But for now, I'll use the pennies. And a 25% gain, which means 20% of your stack, which would be technically 1 point, a little over 1, would do the trick. And of course, I would like to sell 5.8 knowing what's coming. And one easy way of doing it too is just always going a little bit lower each time. What you would notice is you would sell less each time, 0.75 from 8, but you would get back more with each sale. In this case, you would get $184 back compared to $156. So let's look to buy that back, say somewhere around here. And again, just lower this a bit, set. And this is where you'd be like, okay, sell it all or wait for 350, I guess maybe it goes to, but 307.43. And that was sold for another 25% gain. And when you get a lot of sell orders like this, you got to be really wary about the pullback. And an advanced strategy playing this game might be when you have a big one like that, be really careful on the buybacks because you can get some really good prices where you might get a bunch of ones in a row where you get cheaper prices. Of course, I'm not going to do that. I'm just going to keep on moving the order books. This is a way of ignoring fundamentals and just playing price action in the mathematics. But in this case here, you're down to 5 of the Dow shares, which means one would represent 20, or one would represent that of 20%. So 0.7 brings it down to 4.35. Again, you're selling for a little bit more, $214. So an example is when you buy back, instead of buying back like $200, buy back maybe $150 first, and then this way when you do some of these buybacks, a portion of this would be cheaper. That would be one way of looking at it, because then you notice how expensive some of your upper buys would be on a market retracement. But then when it has only one or two dips lower, it works out when you have a higher buy. But anyway, let's move on, and you'd be looking to buy this maybe back somewhere around here, previous level of support, and enter the market crash. We're starting it, of course, back then. You can go on the move here and say, ooh, baby, I'm out completely. I remember one person when I did the silver charts, when this happened in 2011, going from 50 to like originally like 42. The person's like, I'm out, I'm out, I'm out. In that case, that was the correct decision because of the major correction that followed thereafter. But for now, 256.29 is purchased. This is a decline of 16.63%. Now in this case, I'm keeping a little bit back on the table, and I'm barely buying more than I sold. And one could say just buy 0.7 back, and you could kind of do that even a little bit better. And of course, waiting for the lower price, moving your buy orders lower would obviously work out, but we're not going to play that way. So then let's first move this sell order down before this high. Move this one up to, say, here. And then see the 197.89 becomes a buy. And we're buying back the one in which had 183 for 0.7 for 0.75 actually. So in this case, I'm going to go a little bit more. 168 purchased, 0.85. That would be bought. Move this up to a place to possibly sell. This little area is obviously would sell at 260. So you're able to get a little bit of the short-term volatility this way. Mention how you go years without a trade, and now you're going to be having active trades throughout. And in a situation when you're talking about looking at this via, say, a single hour time frame, this method, you see how you could have several trades in a day or multiple in a week after maybe going 20 days without a trade kind of deal. 260.2 is the sale. And selling for a phenomenal 31.5% gain. 0.85 bought the last time, so 0.8 can hit the brick and move lower for. We're probably going to get the buy order next because we know what happens. At least this is the great stock market crash coming. So you place a buy order back to where it came from. We'll just quickly check. That's fine. What I wanted to check was to make sure that some of the buy orders may need to be reduced a bit. In fact, if anything, I would even want to reduce this closer to the actual low. The 317 came close to hitting, but not quite. 199.16 is the buy. And the last one was getting back 207 for 0.8. If we go for 1, well, you know what? That's about $8 lower. 0.2 gain. Nice to get a little bit of a surplus that way. And we can adjust the sell order accordingly, maybe somewhere up to about here. We missed that buy, but not there, 149.31. And the buyback we're going to be getting is going to be this one here, because these two are already gotten back, and then this is its own little separate entity here. So this is a spot where 0.8 got us 156 before. 1 would get us 149. So another gain of 0.2 and a bit of the fiat dollars. Of course, back then, they weren't as fiat as they are today, although they kind of are based on the definition of government decree. Let's move this buy order back up again. Say somewhere around here. Barely missed that buy. And let's just manage two at one time. 116.5 and then 88.83. So now we were going with the buyback. Now we're looking at getting these ones, it looks like. So we could be doing like 1.25 and should be doing 2. And given that there's $955 in the bank, should be able to be done. So 1.2. And then we'll go 1.75 maybe. $660 is still a lot of buying power when it comes down to it. Especially when you're only buying 88. If you're buying like 150 a pop gives you 4 more orders. So let's hope it works out. But I'll try to make it do so. It should. But either way, we are now holding 10.1. And an overall portfolio of 1557, which is pretty good considering it's barely up from where the start point was. So this sell order needs to be increased. Let's go somewhere up here, maybe raise this just a hair. Raise that to there and raise this to somewhere around here. Ooh, that worked out, 116.31. So the gain was for 30%. You're owning 10. So therefore, if you even sold 20%, that would be relatively aggressive, which would be like 2. I bought 1.75. So let's sell 1.5. Thus pretty much keeping a quarter in the bank. And in bear markets, you gotta be a little concerned that this thing is going to make lower lows. So buying in here, considering the volatility from here on in doesn't look as good, I'm going to do it there. But one could say just wait for a leg lower. Gonna move this up to about here at 73. I'll move this to about here. There we go. That looks nice and parallelly right. And we would see that it would hit, and exactly as I'm stating, that we would have set it up for a lower low. Now I hit 2 buy orders here. The percentage move on the next one's going to be relatively weak. So is this really the right setup to go on? I'm going to accept that buy, but what I'm going to do is I'm going to remove this horizontal ray. Move this one to about here. And like that. So 87.46 and 73.97. Yeah, see 15% for the second down move. So last time 174 was brought in. So if you buy like 1.6, that would be that's a pretty good buyback at 175 for that. But of course, you know you could get a lot better. Now, given this is a lower percentage move, you really have to buy less in this spot. So let's just assume if you had 1 year portfolio, this is where you look at what you have for cash. Like, can you afford it? Or you think, oh, price is low. I'm just even gonna buy 2 because of how cheap it is. You got this cash, and you just know it's a good time to buy, and we're going to use that for the next few buys the same way. How much cash do we have left? So we got this up to 12 and a third. What we're going to do is we're going to sell one up here, and we're going to do the same thing that we did before, in that we're going to move it higher to a new high. So we'll just move this up like this, maybe move this down a bit like that, and even this down a bit. So we're just going to add one more future sell order because, again, you want to make as many of these orders that you can be sold for larger gains, just finding a way to have a good supply for when the getting gets really good. Of course, that would be later on. So here we have a buy at 58.84 or 56.84 rather. It's a decent 23.16 correction. $532 cash. 2 would cost 113. You did 150 before. If you go 2.5, it'd be a little less than before. And you'd still, and we're not going to need that much, have 390 left to buy for future dips below. Also, the net portfolio is 1,234. Price action 56.84, which is barely lower than where you started. So you've already overperformed the market to a tune of, just having a percentage gain of 23% rather than marginally being down. So let's put a sell order in again. And now we can see that it goes down to 45.75 is what the buy order number is set at. And the market's bottoming now. But this is where people will never think, oh man, it's just dead, it's never going to be good again. If I buy 3 here, that would be a little costly, 137, but I'd be thinking I could buy a couple more times, but after that I'm going to need to get a loan. Of course, that loan will never need to be filled. So we'll try to get a gain up somewhere around here. And of course, we're just going to count 2 sell order fills here. 61.11 and 77.99. So the first time it's a gain of 33%, owning 17.85. We bought 3. If you sell 2.5, you're basically keeping a half for the bank that way. And before that, you had 2.5. So maybe you sell, say, 2.25 even, which would represent like 15%. And if you're selling 15% what you have on a 30% gain, that should always work out well for you in this type of way of trying to get as large of a sell order that you can in quantity, but making sure that if it keeps going higher, you're going to have as many tokens or coins that you can. So we can place these buy orders where they're never going to get seen again. They're just going to be, we're going to end up with a whole bunch of lines, forbidden, if you will. Maybe this one will come through. It looks like it did. 58.36, and the low here is 57.60 change. So 58.36 is a buy. And after selling 2.25 for 179, you got to think that 2.6, oh, that's much cheaper. 2.8, 2.9. Even 3. Yeah. If you're selling at 80 and you're buying at 58.36, if you sell 2.25, at least at this, most rakes, all rakes really, you buy back 3, you're going to get it at a cheaper price. So there's a gain of 0.75 added to the inventory. So let's sell it up again, say previous high. And there it is at 80.13. And this is another interesting strategy here. Last time you sold 2.25, bought 3 back. So I'm going to sell like 2.3 or 2.35. Enough where it's a little higher than it was before. And continue on. Now your net value is at 1,700. Doing pretty good. Place a buy order lower. Say at these previous lows in here. And I don't think this hit. High is 11 or 110.30 followed by 110.53. So let's just minorly move this down below. And there it hits at 109.36. And the amount to sell here, we're looking at yet another 36% gain. So it was 2.25 before. If we sell about 1.85, that would put us at $800. That would also work out to be like 15%, well better than 10%. It's 13.7 or 1.37 would have been 10%. So you look at about 12, 13% of your portfolio of Dow that you're selling. And you got your net worth up to 2,100 in this, but we got a long, long ways to go. And we're 40 minutes into this, so I'm only going to do a bit more. And I don't know how many parts now this is going to be, but this is something I've really wanted to do for a few days now. Because for the coins that just surge, I want to see how well that it's actually going to manifest itself out. Okay, so we'll just see that we're going to a period where we haven't made any trades until now. 157.10. I'm going to make this the final one. This worked out to be a 43% move. These percentage gains might be getting a little too high, but to a degree, that's what you're supposed to do in the crypto space. So with that being said, if you're selling for 50%, you could very easily afford to get rid of 1/3. I would think 2, but I'm only selling for a little bit of a gain that I did before. So I'm going to sell 1.85 of these, and now I'm holding 10 at the price pivot of 157, which is important because I had 10 before at the price pivot of 58 with $418 back. Now I got $1,000 back on that point. So then, what I'm going to do is I'm going to date this March 25th, 1936. And I'm just going to fast forward this right now. So that when we go to the next part, and I'm going to wait until the next day. I don't want to, this will be the last one of the night. I'll do the next one sometime on Saturday. And therefore, the three things, or why I'm not concerned why the overperforming of the market is going to be a problem. Well, situation number 1 is we're going through right now the greatest retracement the Dow has ever had. So all of these amazing buybacks we're going to have, well, they're pretty much done. It's going to be sell, 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 buy, sell, 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 buy, sell, 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 buy, pretty much the rest of the way. But in reality, there's a lot of these big pullbacks that will occur. So instead of markets going like this, it's going to have a tendency to have more of these choppy kind of moves, which is, again, what I'm looking for within this method of trading. The second reason why I am going to be still excited to trade this way, even though I'm most likely going to see hodling the Dow outperform what I'm doing here, is because I realize that when I look at a market that would looks like up like big time like this, and of course I'm only going back to 2001, when you're including the $40 lows and the 24,000 highs and all this, you're like, wow, it's got to pull back at some point. And all these coins have been doing that. When you look at the coins like the Dash and all these other ones, maybe not giving back 30% or 20% of its move, but 15% of its move is a big linear number, especially when you're talking about 300, 400, 1000x gains, which is what this purpose of this video is for. And this is where I don't even care if any one person watches it, because I'm doing this for myself. But I realize there's going to be 2, 3, 4, 5, maybe 10 to 50 people, 30 people, 20 that are actually going to be interested in this as well. And the third reason why I don't mind doing this is because you never can go wrong for selling for a profit. So when I talk about the strategy and the main situations, markets going up, down, and sideways. If they go straight up, then you're going to be cut short of a lot of profits that hodlers would get. If they go straight down, you're going to keep buying, you're going to lose, it's not going to be fun, and you're not going to be able to make any money, you're going to be losing money. There can be situations where it goes down long term, where you get some choppy moves like this. And if it does this, then you can win in the downtrend. But you have to have that spectacular choppy movement. And then sideways, of course, you know it's always going to win as well. So the strategy loses two ways. The down one, which is a true loss, and the up one, which really isn't that. So that's why I have no problems playing some sort of coin that has a 20, 50, 100, like I say, a 200x gain, and only capitalizing on maybe a 40, 50x move on the way up, because only price pays. Thank you for tuning in, and yes, part 2, maybe even part 3 after that, but this is important stuff for me. Thank you for watching, and have yourself a great day. Bye-bye.